Welcome to Preserving Your Wealth with Mike McCormick, where we talk about smart ways to invest and preserve your money. Mike is a registered investment advisor with McCormick Financial Advisors in Bozeman, Montana. As an independent fiduciary, Mike does not receive commissions from any of the products or investments mentioned on this program. Consult a professional before making any investment decision. You can find old shows archived at McCormickFinancialadvisors.com. Learn, participate, interact.
And the Mike McCormick's in the house. Shaman Taubman, half man, half amazing, is on the line in Vancouver, British Columbia. And we were talking about money, Mike, before we went on live here. So.
Oh shoot!
Yeah,
I don't have much to say about that.
One of those topics, huh?
Happy March.
Yeah.
In like a lion.
Well, from the markets anyway. Why are we up 1,000 and then we're down 500 and we're down 600 right now, 610.
Yeah, you got to pay attention closely, don't you?
I know. What's going on?
Good grief. So, yes, the stock market is uncertain. It's the unknown is unknown is what Jim Cramer's been saying, meaning that we don't really know what's going to happen in terms of how big this is going to get. We don't really know the impact of Federal Chairman Jay Powell's what I believe is an irresponsible emergency rate cut. We don't really know what the impact on the economy is going to be for people not traveling. I mean, fundamentally, I'm trying to get my head around, okay, who's going to suffer, right? So we've got a scare other than the people that get sick and the unfortunate 3% now that are going to die from this disease. Other than that, so I empathize.
Sure.
I hope not to be in either of those camps or any of you or anybody I know. In terms of economics, where's the loss? And so what I'm seeing is that it's coming from people choosing not to travel, choosing not to go out to eat, and choosing not to go to the ball game or the play or something. And, of course, this is not happening here, as far as I can tell yet. This is happening in places where there's, known cases. And from what we read, same as you, same as everybody listening out here, is that it's not a question of if, it's a question of when, somebody that's sick with the coronavirus. And so that, to me, is the moment when we will probably hit the bottom of the stock market, is when it becomes a reality for the average person that, oh, my God, I know that Aunt Susie over in wherever's got it, and she's got emphysema, and that she might die from this. That when a fear that you watch on the TV, like the terrible tornado impact the other day, when that's coming to your neighborhood, then we have a change in behavior. Then we have a real danger of finding a new low of people acting, in their self-interest. But I said it last week too, is underlying all this is the fear of the zombie apocalypse that we've been conditioned to expect. And you can't get rid of the idea that we're all mortal and that there might be an unknown that takes down all of society and the family and friends that you love. So that's the underlying fear that we all need to address. And so the stock market's addressing it by whipping around, crazy.
Yeah, going all different directions.
Yeah.
Well, Shane and I were talking the other day, and you were talking about people going out to eat. If I don't go to a restaurant in March, I'm not going to go twice in April to make up for it.
Right.
Once you lost that day, you've lost that day.
Right. I mean, if you're planning on upgrading your phone and you have to wait because they're out of them, you'll still upgrade your phone when it comes available.
Or buy a car.
Right.
Or,
But, they're like, the cruise lines, they're going to get decimated. They've recovered from how many times have you seen a picture of a cruise ship that's been quarantined out in the middle of nowhere? And you're like, oh, my God, that must be, to me, that's hell.
Yeah.
So what am I telling clients right now? Well, first off, what I have to brag about is that I've gotten one client phone call out of all this. And so what that means is that my clients are feeling comfortable about their money, and I hope that everybody out there does too. You don't change lanes on icy roads. You were diversified, and you were paying down debt and boosting savings for the past 2 years of this fantastic bull market because you knew something was going to happen. And you were always keeping your retirement accounts exposed to risk because you know that any one of these days we could have a 1,200-point gain or something crazy like that, right? You just plan for these things, and then when they happen, you stay with the plan. And when does that change? That's the question that you get when somebody calls and says, "Okay, we had this plan. well, now we got a zombie apocalypse. Did our plan account for the zombie apocalypse?
Well, there's no real end in sight for this. Even if the cases in China drop dramatically.
Well, the end that I've read, and you guys have been talking about this all week, is that come summer, this is a seasonal thing.
Usually, yeah.
Usually
is, yeah.
There'll be less cases of it, and it'll go away in the news. And then next year, when it comes, the flu vaccine, the flu season will wrap in this new type of flu that we can get that is contagious and potentially deadly. And as behaviors, we're all going to adapt to this as a society, and maybe we won't be shaking hands. Maybe we will be fist bumping forevermore.
Yeah. Well, I saw a video the other day where people kick each other's foot. You kick the right foot and then the left foot. That's how you say hello.
Oh, I like that.
So there you are. Yeah,
I think
Shane and I started doing that years ago.
A good old hip bump, like a good 70s sort of hustle hip bump. Maybe we should get into that too. Shane, how are you this morning?
Good, Michael. Elbows work well.
Yeah, we can elbow each other.
I think there's nothing wrong with a fist bump. I'm not discounting the elbows, the hip, or the feet, but there's eye contact. Nobody's off balance. Nobody's swinging sharp objects at each other.
Yeah, that's true.
You can go in slow.
Yeah,
get a nice little tap. Well, we'll see how it adapts to that. But in terms of there's two things going on. One is that we have this coronavirus scare that is going to take money off the GDP, and fundamentally, it's okay from your economic portfolio standpoint. It is an opportunity for us to come back to some real valuations, to take a break. Yeah. Yes, some companies are suffering more than others, but it's a breather that is potentially going to protect us in the future when we build back up and have gains again, because the consumer's never been stronger. Their debt load's never been lighter. Free capital, if this continues, like you said, if this doesn't go away, which it will, right?
Yeah.
We just need Michael Jackson to hang a baby out the window, and we're going to be on to a new news story.
Yeah.
But it'll go away. But if it doesn't, yes, then we've got to. Part two is what the Fed did. Interest rates. Fascinating stories about interest rates, and I don't like going too much into them in the morning show because I don't want to cause traffic accidents as people fall asleep.
Yeah.
But this is what controls the big stuff, right? The big money. And for us to do an emergency cut right now of rates is to imply that we're looking at something similar to the financial crisis. We haven't had an emergency rate cut since the 2008 financial crisis. We're not looking at anything like that. We're not looking at anything that was caused by economics. We're not even looking at anything that could be solved by economics. So this is, in my analogy, this is bad parenting. This is a parent that is not willing to let their child fall off the swing set because they're doing what they were told not to be done, and to pick themselves up again. This is somebody that swoops in and starts suing the school because the swing set was in the wrong spot. Yeah. Bad parenting. And that ends up with bad behaviors and bad kids,
Yeah.
So we'll see how that settles out.
Yeah. I want to go back to, I want to get Shane's input and your input on this Fed decrease, rate cut.
Rate cut.
Why half a point? Why?
Well, that's what I said.
That's
what I said. He was worried about his kid falling down on the playground,
Well, I think it's a little more than that, but
it wasn't. It was because he was, and this is where I'm getting a big Jim Cramer-esque on it, but he is concerned with propping up the stock market. He's concerned with politics. He's concerned with popularity. He's a banker. He should have a much longer view of this.
Yeah.
But so the only out that I think he's got is if he's concerned about keeping a yield curve inversion from happening. And so, again, sorry if you're crashing your car, but if you borrow money longer, it should cost more than if you borrow money short term.
Yeah.
And the yield curve is what defines the steepness of those rates. And because of this scare right now, because of the way that U.S. is positioned internationally, our 10-year bond is extremely popular. Everybody's buying it. It's safe. 10 years is the life cycle of a mortgage. Typically, there's a lot of reasons why the 10-year is really popular. And when people buy that reduces the amount of interest it has to pay. And so that decreases the rate of return on loaning money out in 10 years in any sort of form, whether it's a high-yield bond or a mortgage. It's all tied to this government amount. And so in order to make it in order to have an incentive to want to spend money today, you need to have a real cost of money for borrowing it longer. That's why they lowered the short end of the curve, so that it would be hopefully stay below this 10-year amount. And what we're doing is we're backing ourselves in the corner where we don't have any more room to go if we actually have a real financial crisis.
I was going to say, yeah, you can't cut them anymore.
You can't cut them anymore.
Could, I guess, but
I
mean, we almost got to zero.
If rates are going to go negative, we're that much closer to that.
Yeah.
So we have an underlying extremely healthy economy.
Yeah.
Nobody's disagreeing with that. We've got a problem in some areas, but getting back out of this is just going to be painful.
Yeah. Shane, what do you think?
Global sovereign debt is over 78 trillion. U.S. debt is about a quarter of that, or so, maybe even more. The bottom line is U.S. dollar is the most stronger dollar in the world. You got the strongest economy in the world. You're the largest purveyor of consumption in the world, and Europe is in a mess with Brexit and England on their own now. Europe, Germany is in trouble. France is in trouble. Italy's in trouble. The currency was in trouble, as we talked, which is why I believe the market rebounded, like the futures market did in 87 on Tuesday, causing the entire market to move back up. And so his reasoning for making it is got to be looked at as to why. And he had a call with your Secretary of Treasury Mnuchin and the other heads of the banks, not their counterparts, not the leaders, their counterparts in the G6 countries, and they're all in trouble. And they were all looking to the United States to help them. So the cut wasn't for the U.S. and it wasn't for the market and wasn't for politics. It's staving off a major global economic problem in the other places that the U.S. supports, because there is a bubble in China, and you and I have talked about it for 4 years.
We have,
and, it's going to happen, and when it happens, it's going to make the coronavirus look like the fly on the backside of an elephant's you-know-what. So, all this is coming together at the same time, and they got numbers we don't know.
Yeah.
How bad the airline industry's been hurt, service industry, even food, transportation, logistics, all these things are now in play. And earnings come off and the market turns, the U.S. dollar weakens, and there is a real serious problem for everyone else, not the U.S., because your economy's really strong. It can handle anything right now, except the stupid politicians that don't want, Trump to win, so they'll.
What happened to America first? What happened to MAGA? Why do we care what the international economic scene is? Why are we weakening our dollar?
Because it's a global economy and it's interwoven. And he hasn't completed the unlatching of the trade patterns that Obama and Biden set up with Clinton and Bush. And like I said, when he finishes, when you get through this, he's going to do a deal with England. Won't bother with the EU, and he'll move to get out of the World Trade Organization because of China, because he saw this coming. Guy's brilliant. He saw this coming. Not the pandemic, but where the dependency the U.S. and the rest of the world had on China.
Yeah. All right, we got to take a break.
You got to take a break.
Yeah. Jay, we got a caller waiting. If you could chat with them, I need to tell you, we're brought to you by the Club Tavern and Grill, voted Bozeman's Choice Best Happy Hour. The Club Tavern and Grill offers happy hour specials every day of the week as one of Bozeman's most popular happy hour spots and sports bars. You'll be sure to find something you'll love from their extensive drink and food menu. They also serve breakfast, lunch, and dinner, and a kid-friendly menu is also available. So to place an order for pickup or to make a reservation for parties 6 or more, go online to theclubtavernandgrill.com, theclubtavernandgrill.com. Check them out. They're in the Best Western Grand Tree on North 7th across from Walmart. It's where the locals go. And, of course, tell them Tom and Shane sent you. Mike and I and Shane will return right after this. 24 minutes after the hour, we've had a caller patiently waiting. Caller, you are on the air. What's going on?
Well, I built a metaphor. Now, if I had a car and had to take it in for major repairs twice in the last 12 years, and this time the mechanic says, tish, 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 this will be about a $2 trillion job, why wouldn't I admit that I've got a lemon? Why do people blindly go on a debt-based inflationary economy, even if it's bankrupting them? Why not get a different model or even a different operating system?
Well, we don't have any inflation to speak of. We have a bullet train economy right now. There's no lemons. We do have an anti-lemon law. If you have a lemon, you have recourse in the courts.
And the federal chair just dropped the interest rate you're paying on your debt.
Yeah, so you're paying less for almost everything you have. So, what's the problem?
Well, to a lot of us, including the Bernie people, we see that capitalism isn't working except for the rich. Pension plans have been
Whoa. Okay, are you on any government subsidy?
Oh yeah, I'm
okay. But capitalism doesn't work. Do you have food in the fridge?
I don't have a refrigerator.
You don't have a refrigerator, so you go out and buy the food you eat every day.
Well, yeah, I
okay, but capitalism doesn't work because you have enough choices of food to eat every day, or do you have to have the same rice bowl and fish heads?
No, I have a good range of foods because I've learned about.
Are they within walking distance?
Yeah, the new food co-op.
You like the accommodations you have to live in?
Yeah, I'm quite satisfied. But what does it have to do with the economy?
Well, that's great because you're basically 1/10 to 12% of the world that has all those things, and you're complaining about where you live and what you have.
I'm not complaining. I'm saying the system is not working. But
it is. It's providing you everything that you need.
Well, what about
80% of the world wants? 80% of the world wants what you have. That's why they want to come to your country.
Yeah. There's no exit. Yeah, there's no speed bumps at the border to keep them from slowing them down from leaving.
That's right.
I was going to say, if anything, they're trying to get in here because it's a good deal. So, I get a little bored. In fact, I get extremely bored when people say that the system only works for the rich. Well, it doesn't. It doesn't work for the rich. The rich were not always rich. And, the fact that they had an idea and ran with the idea, it may have succeeded, it may have failed. But anyway, they took their shot. And, it either happened or it didn't. Michael Dell started Dell Computers in his dorm room. So did Facebook. Gates and Allen started in a garage. They had some family money to put up, but still in all, there was no guarantee that Microsoft was going to be big. There's no guarantee Facebook would take off. There's no guarantee that Michael Dell Computers would sell.
And then Dell Computer, if you invested $10,000 in Dell Computer, you became a millionaire within 36 months of that investment. And he created more millionaires in the United States than anybody in history.
Yeah.
Anybody.
And millionaires are growing every year. We have more of them each year. Even in China, the millionaires in China are growing faster, than ever before.
All right. Well, you're cherry picking certain types of people. What about the old rich that have been living off their?
What about them?
You
mean the trust babies that are too lazy to go out and do anything?
Well, I wouldn't be surprised if there are a lot of them that have gotten.
The Kennedy fortune was gone by the Kennedy fortune was gone by the third generation. So Joseph Kennedy's great grandchildren got the last of the fortune he created because that's all they did was live on it and didn't do anything but live on it and party, get drunk, become addicted to drugs and all kinds of terrible things.
Yeah. All right. Sorry, gotta go. Up against the clock at the bottom of the hour. Thanks, Mike or Daniel, rather. Sorry.
Daniel Peterson.
All right, take care. All right, Mike McCormick's in the house. We'll be back. We've got to talk about, we've got to talk about the, how much is the primaries have?
The Bernie effect.
Yeah, is there a Bernie effect? Is there a Biden effect on the markets?
Let's talk about good sales coming up.
Okay, we'll do that. All right. That's better, probably.
Shopping for sales.
That's right. All right. Because everything is on sale right now. We're down 580 points. So.
I think it's going to get better.
Yeah, I think so, too. All right. Shane and I, Mike, will be right back. 24 minutes before the top of the hour. Shane Taubman on the line, half man, half amazing, in beautiful Vancouver, British Columbia. Tom Eagle, your morning mayor, in the house. And we welcome Mike McCormick Financial Advisors, to the house. Hey, maybe I turn you up. What do you think?
Ooh, it is hard to hold my breath for that long, but it's good. They say it's good for you.
Yeah.
Thanks for having me.
Yeah.
Thanks for having me.
Well, I'm glad.
We have a caller?
Glad you're here. We do have a caller.
Oh, let's hear what they have to say.
Let's see what's going on. Caller, you on the air. What's up?
This is Steve. I had no idea you were going to have a guest. I didn't have a question for the guest. I apologize for
That's
that.
okay. What's going
ahead, Steve.
on? What's going on?
Well, I'm a little tired of hearing Daniel R. Peterson bash capitalism.
Yeah.
It just gets so hard to hear, and I'm glad that you guys are making an effort to contradict what he has to say, and I appreciate that. But it just drives me nuts that he bashes capitalism. It gives me, the person, the individual, to make the choices that I want to improve my life. Some people call that greed. I call it American freedom. I'm sick of it being bashed. I'm sorry. I'll let your guest continue. You guys have a wonderful morning. That's all I had to say.
All right. Thanks for the call. All right. Appreciate it. Well, yeah, we're a capitalist society with socialist programs. I mean, if you want to put it that way. We've got Social Security, we've got Medicare, Medicaid, things like that. But basically, all of those programs are provided for by capitalism.
There is no, you can't be black or white on this,
No,
right?
you can't.
And really, also a lot of the argument, the criticism about policies and capitalism right now is a lot to do with the, we're living today at the expense of tomorrow, right? And that's a pretty esoteric feeling. It's hard to get a grip on that. And really, if you look backward in history, people have always been worried about something, and things have worked out pretty good.
Yeah.
And everybody's not equally compensated. You're going to talk about that next session too, with women's pay equality. So we have progress to make, but so long as everybody has equal opportunity, a system where everybody's not equally compensated is a good one. I mean, there's people that make a lot more money than me.
Yeah.
And there's people that work a whole lot harder than me too.
And make less.
And make less and make more.
That's true.
But on average, the people that are making more money than me are typically working harder than I am. And I'm like, oh, good for them,
Yeah.
I like to come home and see my kids, and that means I don't make $1 billion. But, one thing I did want to go after before we get into other topics is what do I think investors should do right now? Because a lot of people hopefully have some dry powder during a boom time that we've had for the previous, 10 to 3 years, depending on what business you're in. You've been having surplus cash, hopefully, building up. And what should you do? Step one is if you haven't refinanced your house in 3 years, and I know that's a short period of time, you should shop it, because this is unbelievable how much what the low rate is you can borrow against. Now, that said, I also have been preaching to people about paying down their house, too, because if everybody wants to retire with no debt, you have to get started on your $350,000 mortgage at some point in time.
It's true.
Or I see mortgages that are over $600,000 all the time, and I'm like, how are we going to? We're not going to chip away with this one with double payments,
How you going to do that one? Yeah.
Right.
Well,
and so I do think that there's going to be another leg down on this. And I think there will be a buying opportunity. Yeah. I don't think we're there yet. I think that these big swings that we're seeing is two things. One, I think there's automated programs that are doing things. I don't want anybody invested in an automated program because I don't think that they make money except for the people that run the programs. And then I think that there's amateur hour out there. I think people are buying and selling based upon emotion, and we don't invest with emotion. And thirdly, I think that the correlation that the exchange-traded fund business has brought about to things has made it so that if you're a home gamer or stock picker, there's not a lot of opportunity out there. The stocks that are down more than others right now, well, they were the ones that were up more than others. Right. So it's when I bring up my indexes and look at it, to some degree, if you're looking to invest in stocks, to some degree, it doesn't really matter which ones you pick. They're going to behave pretty similarly. Same things with debt. So, and I know that might be, listen to my disclaimer again before you do that, but I don't see a whole lot of value in spending a lot of time in picking Coke over Pepsi right now. Just buy the index.
All right. Let's take a phone call. 522-TALK is the number. Caller, you're on the Morning Soapbox with Tom and Shane. And Mike, what's up?
Good morning. Since we broached the subject of socialism today, I thought I'd like to share an experience. I'm an old guy and was a naval officer when we went to the all-volunteer Navy. And the people who wanted to stay in and get 3 squares and have a place to sleep had a tendency to be druggies. And I could safely say that all of the sailors that worked in my division were using drugs. And they would want to talk great philosophical subjects, and they would read books on Zen, and you'd see them carrying that around. And they developed independently the concept of socialism, although they called it the Omni-People Program. And so the points are that people's brains will do amazing things to defend their situation. And they won't take credit for the reason that they are stressed out. It's always the system. For example, the sailors felt that since they were a person and the commanding officer was a person, they should be paid the same. And totally overlooking the fact that they basically sat on their hands and did nothing productive all day long, and the skipper worked. The other point was, every time I hear a certain caller come in, I am grateful that while people around me were wrecking their minds on drugs, I chose not to. And that's
all right.
So
thanks for the call.
You're welcome.
Bye-bye. Right. Take care. All right, I got to take another short break. We'll be back in 1 minute. Hang on. 16 minutes for the top of the hour. It's Thursday, March 5th, 2020. Shane Taubman, half man, half amazing. Tom Eagle, your morning mayor, and Mike McCormick, McCormick Financial Advisors, is in the house. And Dow's down 675. How's your 401k? Could some of this be that the market finally cares about truth and Trump's lies are a concern? Or
this is all about zombie apocalypse.
Yeah,
it really is. So we were too expensive.
Yeah,
we were too expensive.
Yeah,
and we talked about it all the time. And it's not just the stock market that's too expensive. It's real estate's too expensive. It's the latte that you just paid $4 for. It's the lunch that you just paid
$8-10 for.
Oh gosh, if you can find an $8-10 lunch,
go for it. Yeah.
You're at the soup kitchen.
Right. Yeah.
And no criticism of. I mean, I guess I am criticizing local businesses that are charging these prices, but things, it got to say that there was no inflation that was measurable and to live in Bozeman, Montana, and try and keep up with the Joneses. You're like, wait a minute here.
Whoa.
I'm not sure what they call this, but it feels like inflation. So we're having a bit of a reset on that. Your 401k. I did just get my newsletter just hit. Timing's everything. And it said, first of all, it said February 2020, and it was March, I think, the day that I got it in the mail after the post office kicked it around to me. So apologies there. And it said, I think that most people should be taking a bit more risk in their retirement accounts, right as we were having these, these wild gyrations. And I think, that's actually true. And of course, you need to balance that risk, as I say in my newsletter, with being safer in other parts of your life. This is not, I think I want everybody to be more risky, but in your retirement accounts right now, you can get stocks on sale, or you can get bonds that the only way bonds can go up from here is if we start getting sucked down into this global negative rate territory. If we have a big recession, and you need some things to prepare for that, but I don't think you need them in your 401k, especially if you're 20 years away from using that money. It's not a bad time to go shopping. And European equities, they've been looking cheap the whole time. They still look cheap. Their price to earnings ratio is better than ours. Their dividend ratio is better than ours. I don't have great optimistic hopes for Europe, but I do think that a balanced diet means stay balanced right now. The people that have diversified portfolios are not seeing the swings as badly as the people that are all in.
Well, that's what I was going to say to this texter. How's your 401k? Well, if you're in the Dow only, it's not doing well. But if you're diversified, as you said,
you still are probably up 5% in 12 months.
Yeah, I would say you're
5%
right.
is a pretty good deal for not doing anything. But I'll tell you, it's like a roller coaster.
Yeah,
you might throw up on the way to just being a little bit higher.
Yeah,
so behavior trumps everything.
Yeah, all right.
Pun intended.
Let's take a phone call. 522-TALK is the number. Caller, you on the air with Tom and Shane. And Mike, what's up?
This is Clint.
Yeah.
Hey, Clint.
Good morning, good sir.
Good morning. Good morning, Shane. Good morning, Mike.
Yeah.
Well, I got...
Mike's not going to say good morning to you.
Oh, no, I gave you a hey, Clint. Hey, Clint.
An old guy like me, it doesn't matter much.
Good morning, sir.
What's up?
I got something I want to ask you guys.
Mm-hmm.
This is about money.
Okay.
You got your tax bill, didn't you, Tom? You
Yes,
and Mike?
Absolutely. Sure.
I did.
And on the left side of the column on that tax bill, what did you have? What did it show there?
A whole bunch of itemized stuff.
Yeah, I was thinking about all that when I went to bed last night.
Yeah. You can ask the commissioners about that tomorrow, what all that stuff is.
Well, I know what it is, but what I'm getting at is this. I'm 85 years old. I don't know how much longer I'll live. Okay, maybe a year, maybe 10 minutes. I don't know. Nobody knows. But when I die, that stuff in that left column keeps going on. I have everything paid for. I don't owe nobody a dime. But I can't really say that, though.
Yeah.
My dad used to say, I don't need money, but the power company does, and and the phone company and all them, they need, and gas company, they need money, but I don't.
Yeah.
Okay. The thing is, when I'm gone, that tax and those things keep going on.
Are you talking property taxes, Clint?
I'm talking the property taxes, and I'm talking about all of the other mill levies and bond issues that's attached to that tax bill.
Got it. Yeah. So you're talking right.
So I'm wondering, is there ever going to come a time to where a man could die without owing anybody anything? It seems like that you get $250 when you croak from the Social Security.
Yeah.
Okay.
They're so generous.
Yeah, and then if you're a veteran, if I want to, they'll give me a marble tombstone.
Yeah.
And engrave it,
Mm-hmm.
Okay, but I've been thinking about all this, and the older I get, the more I think about it.
If you didn't own any property, Clint.
Huh?
If you didn't own any property, you wouldn't be getting that bill.
That's right. That's absolutely right. So,
and that property has gone up a lot in value, and will be welcomed by your heirs. So I think it's the cost of the investment, and I think that some of it's the cost of liberty. So I'm not sure what you're upset about.
Well, I'm upset about that that I'm paying all these taxes, which I don't mind supporting schools and whatever I need to do. But it looks like that maybe when I croak that it ought to be cut off. Right now I support the Montforton School at about $1,000 a year.
The Montforton School has been a fantastic success story, and a big reason why the economics of your neighborhood are better than the economics of other parts of the valley too.
That's absolutely right.
It's startling how much we saw property values change between Sacagawea and Chief Joseph neighborhoods. It's just one of those things, like how a river can't go in a straight line. You cannot have a community where there's a gentrification of socioeconomics. It just bifurcates for whatever reason. And the same house over in Alder Creek versus Harvest Creek, I used to be in the building business, was significantly different in price just because of proximity to the school. So,
well, I understand all that.
Yeah.
Mm-hmm. And every bit of what you're saying. The things that I don't understand, and I'm kind of like Tom. If I'd like to own my property.
Me too.
And I don't own it.
No, you don't.
No, that's the sad part, see? The great American dream is that you own your property. Well, originally...
It used to be that way, but
Well, if you go back in history...
Well, we could have a sales tax and do away with property taxes.
Yeah.
That'd be a pretty healthy one, though.
Oh, yeah. Mm-hmm. It'd be big.
Yeah.
We could. Everybody'd pay then. But the thing I'm saying, when you go back in history, have you guys read the book The Creature from Jekyll Island by Ed Griffin?
Oh, that's the second time I heard that reference in the past week, Clint. So I want to read that.
You want to read that? That was the Morgan and Aldrich and a bunch of them went down to Jekyll Island and created the Federal Reserve System. That's what that's all about. And when they did that, our government, as you know, couldn't balance their books. J.P. Morgan had to loan our government money at one time.
Yeah, he did.
Because we were broke. We couldn't manage money, so they had to do something. And so they created the Federal Reserve System there at Jekyll Island. Okay.
Well,
yeah, and J.P. Morgan was the Secretary of Treasury under FDR and created Social Security.
There you are. Yeah, same guy.
thing that's happened to us, and I think there's 40 governors and states here in the United States that overlooked overlooked the Federal Reserve. Well, what's happened a couple of days ago or yesterday, the Federal Reserve Chairman, he lowered our interest about a half a point.
Yep.
Okay, now what does that do to us, Mike? When he lowers that half a point, what's it do?
Well, we talked about that earlier. Yeah.
Well, first of all, nobody really knows what it's going to do, but the theory is it makes money cheap, gives people room to breathe, and
puts
weakens
money
our
back
dollar,
in the system, and
makes it more punitive for people to invest in bonds and fixed income, and forces money into risky areas to try and stimulate growth.
Yeah.
That's what I'm worried about, the risky areas.
Yep.
Yep.
All right.
That's why I mentioned it again.
I agree.
I got to go, Clint. Hey, thanks for the call.
Thanks a lot.
All right, man.
But Tom, keep working on that deal, and I'd help you so we could.
All right, man. I'm ready to
have
get rid of the property tax. Yeah.
Get owner.
And I think you can do it without a sales tax. But anyway.
Anyway,
all right,
guys.
Take care. All right. We'll be right back right after this. 5 minutes for the top of the hour. Let's see.
I got a hot stock tip.
Okay, let's go.
And you got to play my disclaimer. None of my faults. Don't do anything I say.
Don't do anything we would say to do. Yeah.
But if the zombie apocalypse is coming, we're not going to go outside, but we're still going to consume.
Yep.
And we're going to consume via Amazon.
That's probably true. Yeah.
And UPS and FedEx will be delivering it, and we'll just,
and
wait till they leave and then open our door and surreptitiously grab the package and then put it back out again.
The cardboard manufacturers and all those people.
Okay,
go for it.
Mine is Facebook.
Yeah, same idea. Good
monthly
one.
Reoccurring income astronomically. No overhead, literally no overhead. No inventory. This is the scientific wonder of the world. No inventory.
I know.
Small employment.
And you can interact with people without shaking their hands, right?
Yeah. No fist bumping needed.
$187, and this is like wow.
So you can get both with any good technology index, which is the most volatile. It still is up solidly for the 12-month period. Mm-hmm. In terms of your 401k, you're probably back to September of last year prices. Mm-hmm. If you put it in that context, it's like, it's September last year. If you would have pulled up one of Tom's old shows, we would have been saying, boy, things are expensive.
Yeah.
Amazon's got too much exposure to Japan. Mm-hmm. So same like Walmart. I mean, Walmart's a great country, or China, not Japan. Mm-hmm. I mean, Walmart's a great country, but they have just too much they're too exposed.
Well, and that's one of those places where if there's zombie apocalypse, for sure there's going to be zombies at Walmart. Mm-hmm. Touching.
Zombies at Walmart.
You know what I'm saying? You're going to go touch stuff and, worried about contagiousness. You're going to get it online as opposed to go to Walmart. You might go to Heeb's, a smaller store or something like that. I'm just trying to project where this fear is going to take us.
Yeah. That half point also makes it harder for millennials to save for a down payment on a house.
I wonder how.
I don't know. You'd have a lower interest rate, so.
I mean, for a down payment for a house, you should not be investing that money. That should be in cash because it should not be exposed to a 750-point drop today.
Yeah, right, yeah.
So the best way millennials can save for a house is by working hard and not buying avocado toast and not paying for grooming their beard.
Yeah.
Or the new cars that I see him driving all around.
That too.
Duct tape and roommates is how we did it in our days. I think it's probably still the same formula.
Well, as I've said many times over the years, if you'll live for a short period of time like most people won't, you can live the rest of your life like most people can't.
Right. And there could be a sale on real estate coming. I don't think so.
I don't either.
I don't think so.
There's too many people who want to be here, and they're willing to pay whatever it takes to be here.
Right.
Don't be so sure about that.
I'm saying not yet, Shane. I'm saying there will be a time.
Yeah. Go ahead, Shane.
Primary and secondary markets of real estate in the U.S. are primed for a drop because international money may start to flow out of there.
Yeah.
They may want to start selling their properties if this apocalypse Mike keeps talking about happens. They're going to need the money. So those second, third, and fourth homes they bought in North America in, even secondary markets like Bozeman, they may want to sell. So that could cause that.
And you had a great point, Shane. I know we're out of time, but people aren't owning their second homes in Bozeman. They're owning their third and fourth homes in Bozeman. And you're right. Those are the ones that get sold first.
That's true. Yeah, those will be gone. But I still think if people want to move out of Seattle because of the virus, they're coming here. Because, lions will kill you, bears will kill you, mountain lions will kill you, snakes will kill you.
I have a walk-in closet all right, yeah.
All right. All right, that's going to wrap it up for this segment. We'll be back. We're going to be talking about, to folks. They've got a promotion coming up for equal pay for women. So let's talk about that when we come back. All right.
Have a good week, Michael.
Thank you, Shane. Love visiting with everybody. Thanks for all the calls and comments. Everybody have a great week.
Shane and I will return right after the news at the top of the hour. So stay tuned.